Shubhrakant Panda, Managing Director of Indian Metals and Ferroalloys, and in an official capacity in the past and currently as well, a fairly senior member of the India Inc. community. Mr. Panda, thank you so much for taking the time out and joining us, Neeraj here. Before we talk about your company per se, just a sense, because you would be, maybe you have business interests, maybe your colleagues or your peers that you speak to have these business interests as well. How difficult are the times currently? We know that crude oil movement, of course, is impacted through Hormuz, but a lot of other maritime activity, the costs associated, etc. Is it a big problem currently?
So good morning, Neeraj. Good to be on the show. Obviously, what is going on in the Middle East at the moment is of deep concern, not least because there's a huge expat Indian population over there. But from a business perspective as well, as you correctly pointed out, there is the impact on oil, and you've seen Brent move up sharply already. There is disruption in general to trade, and these are things to be concerned about. I think from a business perspective, what is most concerning is the uncertainty, because this doesn't look like it's going to be a 2-3 day affair. So one has to wait and see how this pans out. But certainly the uncertainty, the disruption to trade, all of this will have an impact. I mean, if you just to broaden the question a little bit, if you look at us, for example, we have no exposure to the Middle East. All our exports are to the Far East. And as of now, we don't see any disruption. But, if you have a stoppage of global trade or a sharp sort of a cutback because of movement of vessels and all of that, at some point in time, it will start impacting. But hopefully, the situation will start to resolve itself sooner rather than later. And more than anything else, I hope and pray for the safety of all people out there.
So well put, Mr. Panda. And the reason why I wanted to start off with that with you, because as in your position and your capacity earlier as the chair of FICCI, you have a great sense of how India Inc. as a collective body goes through, or what does it go through, and the measures that can be taken. Now, can this conflict, if this were to last, present a real and present danger to costs, to margins, so on and so forth, or are some of these manageable? As time and again in the last 5-6 years during COVID and otherwise, India Inc. has shown that when the backs are to the wall, they tend to respond very well. How is this different from the recent past?
So I think, I like the way you put it, that the Indian economy, Indian corporates, I think are very resilient. There is a lot that has been done, especially in the last 5 or 6 years, to add to that resilience. So I would have faith in that. But certainly, if this were to drag on, unfortunately, then there will be impacts. But I think that will be sector specific. That will be region specific, in the sense companies and sectors which have exposure to the Middle East in particular will obviously have some impact. But as I said, I hope that this is something that begins to resolve itself sooner rather than later. I mean, just to give you an example, if you look at air traffic that had completely stopped for 2 or 3 days, but now the UAE has announced an air corridor with limited number of flights. So I think everybody is looking to figure a way out so that it's not a binary that it's on or off. There will be some impact the longer this goes on, but it's from a completely sort of a shutdown reaction in the first 2 or 3 days to gradually picking up. I think that's what gives me hope that the conflict doesn't last too long, and even within that overall setup there, you don't see a complete freeze of trade and commerce.
Mr. Panda, just trying to get a sense of, and like you said, for you, there is not too much of an impact because the Far East will have more bearing. But for the industry as a whole, and especially if crude prices continue on the trajectory they are, what are the pain points that you see?
So look, crude, going above a certain level and staying there for a sustained period, I think definitely has an impact. We all know that. But the government has come out with a clarification yesterday that we have adequate reserves in terms of both, fuel, whether it's petrol or diesel or other things. So I think India is well covered from a variety of aspects, whether it's crude, whether it's foreign exchange reserves, all of that. I think India is a very, very resilient economy. So I don't see a short-term impact. The concern, of course, and it's not India specific. It has a significant impact globally if this were to drag on.
Let me ask now, and thank you so much for answering so patiently all the questions that we had on the ongoing situation. As you would appreciate, in the news business, you focus on what is prevailing. But let me ask about the acquisition. Now that it is complete, what is the timeline that you have on integration, Mr. Panda, and how will that work on the financials as well?
So let me give you a quick update first. As you know, our current output is broadly in the 250 to 260,000 tons per annum range. In fact, as far as FY26, which closes shortly, we are looking to produce about 265,000 tons of ferrochrome from our existing facilities. Now, what we are looking at from the acquisition is 100,000 tons. There are 4 furnaces adding up to 66 MVA, which are good to go. We took control of the unit on the 27th of February. We are looking to start up by the middle of the month. And honestly, what we will get in terms of output in March is going to be minimal, but we will scale up output in Q1 of FY27. And of course, towards the end of Q1, we are also looking to commission the first of our greenfield project furnaces. So as you had put up in one of the slides, from 260 odd thousand tons in FY26, we are expecting to produce about 400,000 tons in FY27, and going up further to between 475 to 500,000 tons in FY28. So that's literally a doubling of, or close to a doubling of output. But the key to profitability and the key to the impact, the positive impact on the bottom line, is the fact that we are correspondingly increasing our ore raising. So as against roughly 725,000 tons of chrome ore raising from our captive mines in FY25, that's going up to 850,000 tons in FY26. And for the coming financial year, FY27, we are targeting 1 million tons or 10 lakh tons. That's, of course, a significant milestone in itself. But more importantly, it allows us to cater to our entire requirement from our captive mines, which obviously is a very big positive in terms of margins. And in terms of pricing, what you are seeing right now is prices are a little elevated given both cost pressures, which of course doesn't impact us because we have captive mines, but cost pressures as well as stainless steel, which is where ferrochrome is consumed, has been growing at about 2 to 3%, which is slightly tepid, but that's enough to keep prices elevated. So in Q3 we saw EBITDA margins around 23%. And we expect that to be there and thereabouts in the ongoing quarter, and as well as looking into the first quarter of FY27.
Okay, interesting. So you've already laid out quite a few of the benefits that will accrue. Just a quick follow-up on that, Mr. Panda, with regard to this new plant, the EBITDA per ton, are you comfortable sharing what the rough trajectory of that will be?
So yes, certainly, broadly what we this is not guidance. Let me be very clear. But what we broadly look at is roughly about 18,000 rupees a ton in terms of EBITDA. At the moment, it is a little elevated, as I said, because of prices. But more importantly, something that I need to add as well, that both the Kalinganagar facilities, which is the greenfield as well as the acquisition, are logistically very competitive because they're closer to the mines, closer to the port, closer to stainless steel consumers in Kalinganagar and elsewhere in Odisha itself. So when we get the facilities up and running, which is by next calendar year, the blended average EBITDA margins are expected to increase for the company as a whole because we are producing more ferrochrome in logistically friendly locations. And of course, there are operational synergies as well because the greenfield and the acquisition, both the units are literally located within 500 meters of each other. So tremendous administrative and operational synergies besides the logistical advantage.
Okay. Mr. Panda, great to have you today. And in your capacity as somebody who understands India Inc. so well, thank you so much for that perspective as well as what's happening with IMFA. Really appreciate it.